All right, Bulls and Bears. Hope everybody is doing well. We've got a lot of economic slash financial news to get caught up on. As usual, back with another dose of economic reality. Let's go ahead and get right into it. This economy continues to function off of bigger and bigger and bigger loads of debt. As soon as the debt stops increasing, this whole ball game is finished. So, of course, what do they have to do? They have to keep the banks loaning out money. The government's coming in, they're buying the most loans that we've ever seen, especially in the housing market. It's 80% right now. Combine that with investors buying most of the homes in some states. In California, it's actually over half of the homes are bought by investment firms, corporations, and big money investors. So, of course, they're going to keep prices propped up as long as they allow this continue. This is completely reversible. All they would have to do is change some of the laws and change some of the ways that's causing prices to remain elevated, right? You take investors out of the housing market, home prices crash this week, right? Maybe in a few weeks, but you know what I'm saying? It'll crash very, very quickly, right? Also, you stop allowing the banks to loan out money that they don't have, markets crash very, very quickly. You stop, the government stops buying the mortgages, you know what I mean? So it would crash very, very quickly. So, of course, there's all these things in place to keep this housing market propped up, to keep the economy chugging along, and just broaden that out, broaden the housing market scenario into the entire economy, right? Keep on pumping money into the economy, and you can keep things going for a long, long time. The problem is when you have very little production and a lot of people with money to buy things, prices just continue to go up and up and up. And what do we see now? We see the producer price index. Well, if you look at the headline, they'll actually try to convince people that it actually fell. U.S. producer prices unexpectedly fall in the month of May. This is the PPI, as many people call it. The problem is it didn't fall. It went up higher. The thing is, it fell compared to the previous month, right? But it still is going up, right? So this is the same deception as we see in the consumer price index, the CPI, the same nonsense, the same shenanigans, the same talking points. It's completely ridiculous how anybody still believes these numbers, especially when you look at the average household now, 70-80% living paycheck to paycheck. All right, but let's shift gears a little bit here because there's some news I wanted to get into. Speaking of de-dollarization and inflation and the dying dollar, which is part of the puzzle of figuring out why prices are skyrocketing, is the dying dollar. And now we've got another country joining the Brics alliance. The Brics alliance now has welcomed Thailand. They're now emerged as a potential frontrunner with its application. So the application was submitted. You have to apply to get into this Brics alliance here. This is the second expansion effort. The Economic Alliance invited 6 nations in 2023, with 4 countries officially accepting. At a recent Brics meeting of several foreign ministers, Thailand had submitted its recent request. So here we go. It's already about half of the world's countries are on this Brics alliance here. So pretty soon it's going to be the majority. And I have to look, it might be over half now, but this is the direction we're headed, folks. And we're going away from the dollar. Now, why would countries want to go away from the dollar when you have fiat currencies across the world? In every country, there's fiat currencies. Because no one has abused the privilege of having the world reserve currency like the U.S., right? Not only do we create more money than any other country in history, we also buried our population under the most debt. We have the highest national debt. And this is still with a strong dollar. Imagine if and when this is a devalued dollar, right? Because you look at some other countries and you see the numbers higher. That's because their currency is completely imploded. But we haven't imploded the dollar yet. But so far, we've been very abusive to a lot of the other countries with sanctions, kicking countries out of the SWIFT payment system if they don't do what we want them to do or not do what we want them to do. So basically, the world has been kind of a puppet, and the U.S. has been the puppeteer for what we want the world to do. And when you have the world reserve currency, you can control what other people do, what countries can do. Now, every once in a while, an article comes out that kind of tells you what's going on in just a few sentences. In this case, just a headline. Take a look at this out of Fortune. The government using taxpayer money to bail out banks will unavoidably continue. Here's why. Of course, that's true, but it's even worse than that because the tax dollars is already gone. The tax dollars have already been spent. What do we have now? We have deficits, right? If we had enough tax dollars that the government collected from working people to pay for the spending, you wouldn't be running any deficits, right? The taxes would pay for the spending. Of course, we don't have that. We have $1 trillion plus deficits now. So the tax money is already gone. So people saying that taxpayers are paying for this, paying for that, I hear that all the time, especially here on YouTube. A lot of YouTube people say that. But they need to look at the bigger picture. The tax dollars are gone. Now, in order to pay everything, we have to borrow more money or print it in the background just to keep things going, just to keep things functioning. Now, many people, including a lot of people here in this channel, you're looking for a timeline. When is the economy going to implode? When is it going to collapse? Outside of a black swan event, let's just take a look at some timelines based on the federal funds rate. Let's go back here. Let's go back to 2006. And actually, this was mid-2006, right around July, August, when we raised our rate, Fed funds rate to 5.25%, actually less than where we're at now. But it remained there for about a year and a half. So let's see, it was about July 2006. And then when things started really falling apart, they had to cut it starting in October 2007, actually September. So a little more than a year at that elevated Fed funds rate, where they do emergency rate cuts all the way down to zero, rock bottom until 2016. They tried to raise them. Everything started falling apart. The stock market, etc., started falling apart. Then 2020 happened, of course, so that justified another, 2 years of rock bottom rates. Rates went up starting in, let's see, January 2022. And how long have we been up here? Remember, it was about a year, a little over a year, about a year and 3 months, right, between 2006 and 2007. August, we had the 5.5% funds rate. That was August 2023. So we're coming up on a year. So if you just look at the previous timeline, which is about a year and let's say 4 months, we're coming up on a year in August. We're in June, so 2 more months, it'll be a year. So I'm still thinking by the end of the year, we're going to see some fireworks pop off. And it may be not the fireworks that you want to see, or maybe it's the fireworks that you do want to see. If you're prepared for this, this is going to be a nice opportunity to make a lot of money. Look at 2020. Look at how many people right here in this channel went in on oil stocks, oil companies, when oil crashed to negative. And that was complete manipulation there, but it crashed to negative. And you could have bought oil stocks. Some of them went up 10, 15 times from 2020. I was lucky enough to be riding one of those. Exxon Mobil was a big winner for me. And that's the time I like to invest. It's no-brainer situations. That's why I try not to invest too frequently, because you want to wait for, I think the big shoes to drop is the best times to buy. Just like real estate, the best time for me was 2008, 9, and 10. I bought 2 homes in 2010. If it weren't for the timing on that, I probably would have never gotten a home here in California, because back then I wasn't making enough money. But considering the timing and that I had been waiting for it ever since 2007, I was able to get lucky in there. And that was before I even did YouTube or anything like that. I just knew that the market was overpriced. I knew the rates were going up. So I knew it was a matter of time, right? So back then I even had an intuition, even before I got into the whole watching the economy as closely as I watch it now. And I think that's going to happen again. The next downturn, whatever it's going to be, I think it's going to be a bad one. It's going to be tremendous opportunity for those of us that are watching all these details, the news, the trends, the timelines. We know that we don't have much longer if you just look at this Fed funds rate. Sorry, I bumped my mic again. Got to move this away from my from my hands, because I like to talk with my hands a lot. Anyways, hope you guys like this report. What do you think about the Brics Alliance adding on now Thailand, or they applied? So it's growing and growing. Why is it growing? Why? Why would more countries want to join Brics? Because they know the dollar is done, right? May not be done tomorrow, but they know the direction is pretty soon it's going to be gone, or it's going to be devalued, like some of those videos we watch where they have wheelbarrows full of money and it gets so devalued, right? So anyways, hope you guys like this report. What do you think about the Fed's funds rate timing? 3 or 4 more months is all we have if you look at the previous downturn. Or will they just come in with so much money they're going to keep this economy propped up, keep deflation at bay or keep it away. And we're going to continue to see more inflation, right, until the Dow is completely destroyed. All these factors going against the dollar. Got to keep stacking, folks, in this environment. We're going to wrap this one up. We'll see everybody very soon. Bye for now. Peace.